Hi, everybody. This is Larry Green with the Professor Green series for Mercury Leadership. Today on is episode 1, and it's May 22nd, 2022. This podcast is about high compensation versus low compensation in business. For the past couple of years has been a perfect storm for employers because of high wage demands and a tight labor market. Of course, the reason is the pandemic, government stimulus, increased demand for goods and services, and also retirements. There's a lot of reasons that this perfect storm is actually happening and continues to happen. What I'm seeing is this is hitting all levels of employees and employers. I work with businesses from around 10 million in revenue up into the hundreds of millions, and they're all struggling with the same thing. The real issue is how are they handling it? How are they fighting back or resolving these issues? And it's also hitting all stratas of employee, hourly, mid-level management, executives. They are all being affected by if you want to call it inflation, and the tight market, the high wages, et cetera. Some employees are keeping up with the wage demand with bonuses, salary increases, additional benefits, things that the employees value. And of course, you have to figure out what that is. Oftentimes, if they have an HR department, they're using various tools and technology to track the trends in wages by industry and also by geography, so to make sure that they do keep up. In some cases, I've seen some of my clients have actually been caught flat-footed. They've lost lots of skilled and semi-skilled employees. Unfortunately, this tribal knowledge that they have retained or that they've grown over the years walks out the door with them when they leave. And of course, the wages to replace these people must now meet the market. So it's a pretty difficult thing for employers when they lose these skilled people. Now, on the recruiting front, what I'm seeing is a lot of my clients some will have HR departments, and those departments may or may not have experienced recruiters as part of their function. It just kind of depends on the size of the business, the type of the business, the age of the business oftentimes. In some cases, recruiting has been handed off to or has just been a part of someone that's really untrained to be, in any kind of a sophisticated level. They just place ads for hourly workers, especially, or even middle management in the various platforms, and then bring them in, and the upper management and middle management will handle the recruiting and the interviews. But in this day and age, you have to have a much more sophisticated approach to this, because the employees or the potential employees have lots of options. And from my experience, what I've seen is if they don't really like what you got to offer, they move on down the road very quickly. A couple of other things I've seen is that they like an employee or a potential employee, let's say, but then they wait 2 or 3 weeks or a month to make them an offer. And in this market, by that time, they're long gone. They've accepted another job and they've moved on. They also will see you as not really being with it or on top of your own game, because it took them so long to receive an offer from the potential employer. So it really is an employee's market. It's really a difficult situation for employers, but you really have to sharpen your skills as an employer, get the right people in, or use a recruiter. Now, some of you know that I am a big proponent of using recruiters, especially in this difficult market. Now, the recruiters are expensive. That's the one pushback that I get often, and there's no question about it. But they're expensive for a reason. They're typically worth it. Now, I have also heard people with difficult experiences or bad experiences with recruiters. But to me, it's like hiring another employee. You have to train the recruiter. You have to get them used to your culture, your type of business, and get them to understand what it is you're looking for, not just as a one-off, but oftentimes the most successful businesses that use outside recruiters use the same ones ongoing. And if they're in growth mode, which many businesses are these days, that's one of the upsides to this crazy market, is the economy is still very strong and most businesses are very much in growth mode. And some of the people will use recruiters ongoing. And once they learn a little bit about you, they can be much more successful in finding employees that are really a good fit and have a much higher success level of those employees staying. I have one client who has been using a recruiter for probably 2 years. That recruiter has placed at least 6 people in the company, and the recruiter is now just on it. They are very much on target. When they first started, they had a couple of misses where they had sent people in and they just weren't a good fit, but they also weren't hired. They were just interviewed, given feedback to the recruiter, and they got to the point where the recruiter is now highly trained and highly focused on this employer's business. And they do a very, very good job of placing people on an ongoing basis. They're always the first call now from the employer to the recruiter. And it's just, they're part of the team now. And I've seen it work extremely well. Again, I'm a big proponent of this, of using recruiters, and it works. I guess if you want to, take that one step further, ask yourself the question: what does it cost to replace an experienced employee? And then what does it cost to replace them again after a couple of months of a failed recruit? I've seen that happen, and it's extremely painful, extremely costly. It's almost immeasurable because you don't know what production you've lost, what it's cost you in sales, and there's just a lot of factors there. And if you don't have an in-house recruiter, of course you can use, outsource. And if you do have an in-house HR, what I've seen to be very successful with my clients is that if the HR person is not a recruiter, have them work with the recruiter so that they themselves can train along the way. And maybe you can have them do some of the recruiting as time goes on so that you can save a little bit of that output for the remote or the outside recruiter. Another thing that I'm seeing with clients is that as they recruit new employees because of growth, replacement, retirement, whatever it is, they're having to sharpen up their benefits offering. In many cases, especially manufacturing companies I've seen, they haven't offered much in the line of benefits, maybe a low-level health insurance plan, or they don't contribute much to the health insurance, the group benefits that they offer their employees. And so what I'm seeing now is that a lot of them are having to increase that. If they're paying X amount of dollars per month towards that, then they are increasing that. And often the time is they'll pay 50 or 100% of the employees' benefits, but none of the dependents. And so they're digging a little bit deeper and going into that area. And what I've seen is that's a very popular, very valuable thing to the employees. And so that's something you might have to think about is, just look at the whole package that you're offering. So you have to do that to compete. And of course, in the last 2 or 3 years, we've gone to, in many, many cases, to remote workers. I've seen a lot of employers that struggled with this to begin with, but by and large, I've seen this be a pretty big benefit to the employers. They've figured out how to make it work so that it's something that they've embraced, and they're moving forward with it. In some cases, employers have gone to 100% permanent work from home or work from anywhere. It's just become a fact of life, and it's worked well. Some that struggled in the beginning, basically what they had to do was figure out how to measure performance. And oftentimes you'll say, well, it's really hard to measure performance. What I've seen is you may not be able to measure it on an hourly or daily or even a weekly basis, but you might be able to measure it on a monthly basis. In most cases, I've seen that is the case. You just have to kind of pull back from the picture a little bit and look at it from a little further away and say, okay, what did they do in the month? Now, in some cases, of course, you can have an employee, that is kind of laid down on the job and you won't know it for a month. Well, that's not fatal for the company. And the more you do it, the more you'll learn how to measure, and you'll be able to figure out how to make it work for your company. The other upside to the work from anywhere format is that you can now recruit from anywhere. And depending on the specialty of your industry or your company, this can be a big benefit. I have one client who is such a high specialty, they just couldn't find, and they're in such growth mode, they just couldn't find anybody within 100-mile radius. And so they've gone out all over the country. And now, of course, I'm based in Southern California, and so are my clients. Now they've gone out to really the whole country, and they have employees in I believe it's 8 states now, and it's working really well for them. The main thing that they have to keep an eye on is making sure they stay engaged so they can have a little bit of the flavor of the culture of the company. And so there's of course video calls and constant touching of the employee remotely. And then some of them have a plan to bring them in, fly the employees in 2 or 3 or 4 times a year, either all together or systematically, to where they're coming in and getting face to face for a week at a time, or sometimes a little bit more than that. So they really do stay in contact and engaged. And that seems to be working well. And it, of course, is a work in progress to make sure that they're figuring this out so that it works long term. And of course, the title of this podcast is High Pay versus Low Pay. And what I want to address there, and now that we've kind of laid the format down of what the marketplace looks like, my experience with this in an inflated market, high demand, low supply of labor, is how do you win in this market? What are the things that you have to do? I've got a couple of clients that were kind of caught flat-footed, that they were paying much lower on the low end of the spectrum of wages, especially the hourly wages. And as the market inflated, they lost a lot of their employees because they weren't paying attention on what the market was doing. A lot of their employees were in the $15 to $20 an hour, semi-skilled manufacturing labor, and those employees were leaving in droves. And they hesitated on increasing wages, and there was no variable compensation, no bonuses of any kind, and it's really hurt them. And they got behind in delivery with one of their large customers, and that caused them some grief. They were able to maintain the customers as they were catching up, but it's caused them a lot of pain. And they gave a pay raise about a year ago, and then they had to back it up with another pay raise. I believe the first one was 5 or 6%, and the other was 10%. And I believe they're going to have to come with another raise of about 10%. So their wages are going to increase from where they were, somewhere around 25% over a couple of years. But they were paying so low that that they just couldn't compete at that level. So they've had to really do that. And you might ask, well, how can they afford that? Part of the other thing was they had hesitated to raise prices over the years. And once they did a price study, they realized that they were way below market in pricing. And they were able to increase prices a couple of times in about a year without any real pushback, because they were, their products are very high quality, but they just hadn't kept pace. And so it's actually balanced out pretty well for them. And now they've made some other changes at middle management and are really focusing on quality people, developing variable comp plans, better benefits, just a whole host of things. They hired a very high level HR professional where they had no HR before. And this person is really engaging the employees, listening, surveying, really paying attention to what their wants and needs are. And so it is turning around, but it's been pretty painful for them. And to continue on that, one of the things that I'm the most kind of manic about is variable compensation. I am the biggest fan of variable comp. I maintain that if you can measure it, you should compensate for it. And I mean at every level of any business, right on down to the very lowest level. If it's a maintenance person or a janitor or the person that answers the phone, any of these people can be paid on a variable comp. It doesn't have to be a lot if they're hourly, but there is a way to dedicate a certain portion of your net profit to that. And every little bit helps. Even if you're giving $50 gift cards on a monthly basis to the top 10 employees, or to, we have a birthday party for the crew every month for any of the birthdays of that month. Every little thing like that is very much appreciated by the employees. Oftentimes I've heard executives say, well, who cares about a $50 gift card? Somebody making $16 an hour cares a lot about a $50 gift card. It really makes a difference to them that they can have that one more little outing with their family, or they can pick up something special at the grocery store. So there's, every little bit helps in this type of market, or any type of labor market for that matter. And even people that are making 6 figures, they appreciate the effort to have a lunch or a pizza party on a Friday, or, a half day off, or any of those types of things. And also, and my experience has been with the clients, long-term clients that I've got, the ones that pay the best on variable comp, and I'm talking real bonuses now, not just gift cards, but they pay a significant portion of their net profit across the board to their employees to where they get thousands of dollars of bonuses. These are the most profitable companies that I've ever worked with. And it's not that they made the profit first necessarily, but having the best and the brightest in their employees of the employees available. Those people worked hard. They bring top value. They bring in more customers. They bring in better customers, higher paying customers. They develop product and services. They really add the value. They make the company profitable by their actions. And to me, it's not even a chicken and egg type situation. If you pay the best, you attract the brightest. Your employees invite more employees, better employees to join your company. If they're proud to work there and they're making a good living, they will tell everybody. And unfortunately, if they're not making a good living, they tell everybody as well. So my experience and my recommendation is, if you don't have a variable compensation program, that's something to add today, and reach out for help. And that's something, frankly, that my services offers too, is I can help with variable compensation. So I'll put a little plug in there for me and for Mercury Leadership. But there are also companies that offer these variable comp design services that I can recommend as well. But for the long-term value, the higher paid employees really are worth it. And they make a company more profitable. And frankly, they make a company more valuable in the marketplace, because if you're thinking about an exit down the road somewhere, that's another factor to consider. So that's it for the high pay versus low pay. Thanks much for listening. Tune in to more of our podcasts at mercuryleadership.net. And if you will, like us, subscribe, give us some comments. We really appreciate your input. And thanks so much for listening today. We'll see you soon.